In this session, let's try to understand the various due diligence aspects that needs to be performed by any investor on the various funds and fund managers, and what is the prime reason behind them. All these things are very much essential because even an investor needs to know what fund needs to be chosen, how much has to be invested into the fund, and which of these funds could become successful, which of these funds could have problems. All these things need to be understood thoroughly by the investor, and then choose the investment that are more and more suitable to that particular investor's objectives, right? So that is where we are talking about the typical due diligence process. And just before we get into the understanding of the due diligence process and all, the first thing I would like to look at is why did what were the key reasons why the funds, various mutual funds, have failed in the past. What are the various reasons that we can attribute to the failure of the funds in the past? Probably there are some broad headers that they got classified as the investment decisions, either in one single security or a basket of securities. The investment decisions were poor. Probably a thorough analysis has not been done. Thorough selection of the securities was not performed. So those investment decisions have really backfired, which has led to the failure of a fund. Or the other dimension that I would look at is some kind of extreme events, where probably we call them as LFSI events, low frequency, high severity kind of events. Probably a big market crash, the whole stock market crash, or the whole financial economy got under a scanner. These are the events which are low frequency and high severity events. These kind of extreme events occur, the whole market has to crash, which means the mutual funds which are a part of the market, even there could be a crash there. Then the leverage too high, very much possible. See, leverage is usage of debt. More and more debt, yes, it is very good when the economy is doing good. When the economy is doing good, having more debt is probably it increases the overall value. But when the economy is in a very bad position, having more leverage is more like a risk. So it will actually worsen the position. And so typically having a high leverage is opening the doors for an increased risk, and couple of events here and there would cause a big failure, and that is what was happened with respect to the majority of the funds. And another issue is a lack of liquidity, or probably liquidity risk that actually floated up, means more and more withdrawals, right? A lot of open-ended funds, they don't have any restrictions with respect to withdrawals, and very rarely they put any kind of penalties on withdrawals. So at some point, generally if the withdrawals are very high and probably the inflows of the funds are not growing to that extent, there is a forceful cancellation of some high performing investment, which has created the fund's overall value to go down drastically. That's one more dimension where the funds have failed in the past. Then from the operations perspective, or from the personalities perspective, we see there are a lot of places where fraud was there. The accounting related, we have seen whole lot of transactions where accounting data got manipulated and probably provided as if the fund was performing really great, whereas in reality that was not the case. Same is the way with respect to the valuations. Because of the fraud among the various parties, the fund that was not performing well, it was shown as a very good value added kind of a fund, and these kind of valuation issues brought up big failures. Even probably on the same lines as the fraud, I could also talk about the poor control mechanisms, internal control mechanisms for monitoring, supervising, and probably putting some kind of limits with respect to the trading. They were not done. No proper internal controls, putting limits or putting understanding the risky positions. All these attempts were not done, which has resulted in failure of the funds to a large extent. And even there has been some kind of insufficiency with respect to the questioning, wherein wherein the management failed to understand wherever there was a wrong movement, wherever there was adverse movements, the questioning and understanding what has gone wrong has really resulted in huge failure. So all these various things have occurred in the past. So as an investor, my objective is to come forward, try questioning all these things with respect to my the new investments that I'm going to make. How are these things going to be addressed by the new fund managers, by the new funds? Understanding them before making a decision is what is the content of proper due diligence process. So we'll try to understand some of those aspects now. On that dimension, the first thing is, what are the key elements? Key elements in a due diligence process. What should be typically looked at when a due diligence need to be performed, especially with respect to the investment managers. If whom when I have to choose Mr. X as my investment manager, what are the key elements of due diligence that have to be looked out? Background of the investment. How long has this fund been operating? Who is operating this particular fund? Right? What is the sector in which this particular fund invests? So the complete background of that fund manager or investment manager, typically whom we call, what is his background? What are his success stories? How many failures and what sort of failures he had in the past? What is the reputation this fund manager typically carries in the investment market? What is the kind of a branding that is associated to this fund manager? How has he performed in the past? What are the kind of funds he has handled? What kind of experience he brings in into this fund management process? What is the kind of risks he has taken in the past? All these kinds of questions can typically come up. And along with the fund manager itself, probably for this specific fund where we are planning to invest, what is the investment process or investment strategy? Where is this fund going to invest? How much, what is the kind of a diversification strategy that is associated with this particular fund? All these things can very well be questioned, and probably from various external third party sources, the information relating to these things can very well be obtained also. And what are the kind of risk controls that are being followed? Like, are there any kind of limits for individual traders, or is there any kind of sector limit, or limit on particular trader, or what are the other kinds of constraints that are there with respect to the fund manager here? What is the maximum risk? Are there any kind of VAR limits that are computed, value at risk and all? So understanding of all these things, and along with that, okay, the operations related history with respect to the fund, any frauds or any kind of processes related issues earlier, any people related issues earlier, all these dimensions need to be evaluated. And finally, the business model. I'll talk about what we have to do as a part of evaluating the business model risk slightly later. But okay, with respect to operations, my major focus is on fraud evaluation. With respect to the business model, I'm more interested in looking at the risk that is associated with the business model itself. Probably I'll try to first look at these two aspects, and then I'll go to the other thing. So whenever I talk about the business model, I'm primarily looking at, okay, what were the revenues, what are the expenses that this business is generating, probably understand the various sources, go into more and more details associated with the revenues, the various geographies from where the revenue is coming from, the various segments from where the revenue is coming from, the various expenses associated with each geography, each segment, probably even from a minuscule perspective, every location. So try getting the details about the revenues and the expenses from various sources, even to a very granular kind of a detail. And from there, look out for the working capital. How sufficient is the working capital of this firm? Is it required to go ahead with a working capital loan or a borrowing to actually for meeting the short term requirements? How adequate is the working capital? You can take working capital related ratios, liquidity related ratios like current assets to current liabilities, current ratio, quick ratio. All these kinds of ratios can very well be computed to assess the sufficiency of the working capital. See what is the budget, what are the budgets that are allocated to each of the geographies, segments, or probably to each of the lines of business, to each of the business units. Try to understand the budgeted numbers, which are more and more internal related stuff, but try to understand the budgets that are associated with each of these things. And probably at a product level or something, try computing the break even points. When we are doing a business model evaluation, we are trying to understand which of these products are successful, which of these products are eating up the losses, are compiling up the losses. So understanding the break even points, and so even from an investment asset standpoint, the same strategy is typically being followed. And can they increase the investment base? Ability to increase. Do they have the sufficient financial resources to increase the financial base, to increase the investment portfolio? And who is the key fund manager here? And the fund, is it heavily dependent on the fund manager? Is this fund heavily dependent on the fund manager, or is there a streamlined process for the same? If it is dependent heavily on the fund manager, does he have some kind of an insurance, key person insurance kind of a policy? And is there any succession plan that is available with the fund? What if this fund manager resigns and goes, or what if something else happens to this fund manager? All these are typically evaluated to a large extent as a part of the business model evaluation, or probably business model risk evaluation process during your due diligence. But when it comes to the typical operations part, right, where fraud is a major area. But apart from that fraud also, probably along with the fraud, I would also like to look out for the internal controls. From the operation standpoint, my major focus will lie in terms of how strong are the internal controls within the organization. Basically, the various key people, could be a fund manager, could be the research team, the various key people who are there, what is the level of qualification they have? Are they adequately qualified to perform the job, or probably are they winners just on a fluke basis? So understanding their qualifications, understanding their attitude, what is their risk taking attitude? Are they more and more heavily risk taking kind of people, or probably are they taking the risk on a calculated basis? What is their attitude towards the risk? What is their attitude towards their customers? And apart from that, I am also more interested in looking at, are there investment policy statements, probably the written investment policy statement, are they adequately being followed? Are they adequately being monitored? Are they adequately being evaluated for correctness, and uh, uh, any feedbacks and action items generated out of that? What is the kind of compliance checking process that is there within the company, and what are the actions that are being taken for violation of the compliances? And what is the governance process with respect to risk? All these things are very thoroughly checked as a part of the internal control environment. And typically from the documentation process, another important activity, that documentation and the disclosures related process, another important operating dimension that needs to be looked at, wherein all the documents, do they have they taken the legal advice regarding all of them? How are all the points that are written as a part of the fund prospectus or fund brochure, are they in line with the legal, are they really ratified or verified by the legal department or not? And are there any corroborating items that are there as a part of any terms and conduct, any terms and conditions which are corroborating in the prospectus that have been published? What are the what are the various conflicts of interest that are associated? Probably the owner the owner manager kind of a conflict, agency conflict, any such kind of conflicts that are present. Probably are they really identified, and are they documented to a large extent? And has the fund really adequately disclosed all the possible risks, smaller, larger, all the possible risks? Are they really disclosed as a part of the prospectus? And are the responsibilities of the fund manager clearly documented? Responsibilities, authorities, duties, whatever it is. And how accurate are the financial statements? Are the financial statements prepared at regular intervals of time, and are they published at regular intervals of time? And all these things have to be very thoroughly evaluated as a part of checking the operations dimension due diligence process. And similarly, when we are talking about exclusively with respect to fraud, the focus can very well be from the dimension of, when I have to deal with the fraud, I can look out from the dimension of related party transactions. what is the volume of the transactions that are carried out with the related parties, what kind of transactions are all key transactions happening with the related parties itself, what is the kind of differences that are there in the price when the transaction is carried with the related party versus the outside market, what is the level of illiquidity that is getting generated, because sometimes what could very well happen is the current assets can be so high but they may not be able to convert into cash, which could create huge illiquid kind of position. So what is the level of illiquidity that is associated, what is the amount of what is the amount that is there in litigation, means probably a huge amount of contingent liabilities or amounts that are coming up, which will create huge issues with the liquidity. So there could be some amount of fraud that could be underlying that particular process, or in some quarters probably the investment returns are shown abnormally higher, which also needs a kind of a scanner, probably some manipulation either with the system or manipulation. So continuously large returns on a continuous basis. And what is the extent of personal trading that is typically done by the fund manager on his own accounts, and what is the level of shorting that is happening, all these when it crosses the typical abnormal the normal levels, all this could very well give rise to the fraud itself. So a clear understanding and a clear evaluation of the same has to happen before investing in any such kind of fund. So that is one more dimension that needs to be looked at. And now the other side is evaluating the fund manager itself. When I have to evaluate the fund manager itself, probably it can very well be classified like this. Probably I am talking about a fund manager. The focus has to come from four major dimensions. Okay, the strategy dimension. Probably the questions that can typically come out is how did the fund evolve, what was the base for the fund, and how has been what is the journey of the fund so far, what is the fund manager's attitude towards the risk management, what all risk got quantified, and are the definitions in number form or are they more in qualitative kind of a form, and what are the various types of investments and asset classes this particular fund is targeting. So the one dimension that can be evaluated primarily is the strategy related dimension. Then we are talking about the ownership related dimension. Okay, fund manager wise, what proportion of this fund is owned by this fund manager, or probably from the sponsors dimension, what proportion, or probably in the research team, if not the fund manager, whosoever is a part of this particular fund, what is the proportion of ownership they carry, because the more the proportion of ownership they carry, probably they are more attached to the fund, so they will take the decisions in a quite effective manner. That's a typical mindset any investor will get into. And apart from that, the third dimension I talk about is the track record. Okay, what was its performance with respect to the various peers and competitors that are there with similar kind of background of the fund, within the similar fund kind of scenario, what was the performance, probably a 3-year performance, 5-year performance, last year performance, 6 months performance, various kinds of performance dimension can very well be looked at. And apart from that, probably there could be an independent audit or probably verification of the results can be done to assess the track record associated with the fund manager, and primarily the actual fund management dimension. The investment management dimension can come purely through the interviews with the fund manager, or probably background verification checks of the fund manager. All these dimensions can very well be brought in to assess how well the fund manager can suit to this particular fund, and how much confidence you can derive from this particular fund manager with respect to the performance of the fund. And in case I have to evaluate the fund's risk management process itself, not the fund manager, looking at the fund itself, if I have to evaluate the risk management, the process, the due diligence process typically comes out like, okay, what is the risk associated with this fund? So which means what are the various asset classes or various investments this fund has typically got into? What is the risk culture that is present with respect to fund? How much of standard deviation is typically accepted? How much of alpha is typically being accepted? All this kind of dimensions, and any kind of quantification models with respect to this risk. Are they computing the value at risk, and if they are, on what basis is this being computed? So there is a risk dimension very strongly evaluated for the fund. And is the valuation of the securities done thoroughly? What kind of models are being used for valuation of securities? What kind of securities are being valuated? What is the process that has been followed for the security valuation? Is the investment analysis thoroughly done or not? Then, okay, what is the leverage that is associated with this particular fund? What is the liquidity that is? These are the questions that have, these are the areas where the funds have failed in the past. So typical questioning process should look out for all these things. What is the amount of tail risk exposure that is present with this particular fund? Under the extreme situations, what could happen to this particular fund? Consistently looking out for the risk related reports, and the consistency in the performance of the fund. Is it generating like heavy profits in one quarter and heavy losses in the other quarter? All these dimensions have to be thoroughly evaluated as a part of any good due diligence process. And so when we are talking about any kind of due diligence, primarily if I have to broadly classify what should go as a part of the due diligence questionnaire, right? What should go as a part of the due diligence questionnaire? I would look out broadly from the general information, which could be more associated with the fund manager, the background, the basic details, the fund manager as well as the fund, right? Something to do with the execution part. How is this investment process executed? What is the trading process that is associated? Then who are the service providers for this? What is the research? What is the third party research that is typically? What is the dependency on the third party research for this particular firm or for this particular fund? What are the compliance processes that are there in place? And what is the kind of legal expertise that this particular fund has with respect to the investment decisions? Are there any money laundering policies, any policies with respect to anti-money laundering or something like that? What are the kind of policies and procedures that are existing with respect to that? Anything to with respect to disaster recovery? How is the disaster recovery or disaster planning disaster recovery plan? What does it exist? What is the process that is associated with the disaster recovery? What is the kind of insurance that this particular fund has taken? What is associated with the business continuity planning? Is there any kind of key person insurance or some such kind of risk management processes that are being in place? What is the typical the investment process, portfolio construction mechanism that is there? What are the level of internal control? So basically all these dimensions along with the final financial statements of the fund, historical and even the projected financial statements for the fund, all these things need to be thoroughly evaluated as a part of any good due diligence process, right? So that is what is expected out of any kind of due diligence process. This is what I would like to look at with respect to the due diligence as a part of any general investment mechanism, especially with respect to the funds and fund managers. If you have any further queries regarding the same, you can get back to me by giving me a call on the number, or you can send in an email at vamsidhar@pacegurus.com. Thanks a lot for listening to this session. Thank you very much.